What's up?
What's up? Good to see you. It's been a
Markets,
minute.
hey, crazy,
Markets. Markets are crazy. No,
crazy.
but here's the thing. I think that probably the thing I didn't see coming was like a government shutdown. We've seen
Yes,
mines shut down. We've
you,
seen we've
you couldn't
seen
predict that they couldn't talk.
no, they literally are giving each other the silent treatment,
Yes.
which is quite interesting. And this is a room full of fully grown adults, like
Well,
many
yeah.
fully grown adults. But what's interesting about that is I feel like in the past like year or so, the thing that's been really a consistent trend is this, you know, this almost propensity or like this direction towards chaotic and unpredictable behavior. And so I think that's why, like when you look into in the way it's reflected in the markets, I think that's why you see stuff like Dolly Varden, a silver stock, they're up 70% year to date. And you look at the silver price, it's up 66% year to date. You look at the gold price and it's up 48% year to date,
Mhm.
46% in the past year. Like you're only really seeing these things because of the instability and
Yeah.
the lack of predictability in the world. And so then people are going into these assets. The other thing too that could be going on, or is definitely going on, is that the deficit is still high and it's still increasing. And as the deficit increases, spending increases, and they have to find a way to pay. And so they print money. And so when they print money and they're devaluing the currency, it looks like assets are going up in value, but really they're just a reflection of the currency devaluation. So that's another thing that can be going on. But needless to say, whichever one it is, it's been insanely lucrative for the mining sector. Like Dolly Varden, small cap, they're up to $580 million market cap. Then you got Agnico Eagle. This is a multi-billion dollar company, and they're now at 130 billion, and they're up 100% year to date, which is insane. But it
Yeah.
makes sense, right? Because as they produce more and the price of gold goes up, their margins go higher.
Yeah.
But it's insane to think about. And then you got Newmont, they're up. I'm pretty sure Pan American Silver, they're up as well. Like the entire mining market is in this massive boom. And then
Mhm.
other things are also still going up. Like, you've probably seen all the AI stuff.
Well, absolutely. And with
Yeah.
all of the chaos, you see these fads like crypto, people leaning into the chaos, and then there's also a huge majority going towards these assets and with the production of AI, with the production of new technology, all of those resources are going to be even more valuable.
Well, it's funny actually. So I was listening to a talk by Mark Andreessen, who's talking about the AI bubble, and what I liked about his approach on the AI bubble is he said, "Is this an actual AI bubble, or like we had in the dot-com bubble, or is this different?"
Mhm.
And his reference point was if you go back and you look at the dot-com bubble that happened in the 1990s and early 2000s, what actually ended up happening is that it was the telco side that became over leveraged and inflated because that's where, in his words, the 50 plus, 60 plus year olds were. They understood that the internet's going to be huge. And so if the internet's going to be huge, you're going to need infrastructure. And so there was this massive infrastructure build out. Like, people went in, they leveraged, they took out bonds, they took out loans, and they built out all this infrastructure. And it took 15 or so years for the tech to actually catch up to the
Mhm.
point where all those servers that they built, all that infrastructure that they built was actually utilized. And he said you could tell when you hit the peak of of that bubble because it was when the last set of infrastructure was developed and there
Mhm.
wasn't enough people to actually fill it. And so nobody paid for it, and that's when the tides turned.
Mhm.
But the software continued to grow. Like Google is still massive,
Yeah.
huge. They continue to grow. They dropped down, of course, but they continue to grow. Same as Amazon. They were, before the dot com, or they were during, public during the dot com bubble. They went up, they went down, but they went up way more than they went down looking in the past
Mhm.
15, 25 years. And so his thesis is that this build out of you know, all these like GPUs and the whole Oracle deal and the mega data centers that they're building to help with providing all this compute that theoretically AI is going to have. That's where the bubble is. But then
Mhm.
he says you can't really compare them one to one because the issue that you had with the internet was that you didn't have distribution. Most
Mhm.
people were still on dial-up. They didn't have access to broadband. Most telco providers didn't have broadband, and so you had this weird situation where you had this massive boom, but you didn't actually have enough people on the network to support the boom.
Mhm.
Whereas with AI, you have a situation where you have enough people who
Mhm.
like already, GPT is used by like I think it's like 200 million people now, 200 million active users that they have.
Yeah.
And so that was like in an instant because the distribution's there. And so then the question comes back, are we actually in an AI bubble? Which to a certain extent, yes, it might be overinflated for the current moment, but if you look at a 15, 20, 30-year horizon, maybe
Mhm.
it's not. And so then he compares the AI bubble to more so the actual computer revolution. And I thought that was an interesting um, perspective because he says it's actually like computers V2, not really the internet. And so
Mhm.
on a micro scale, it looks like a bubble, but on a macro scale, it's still the beginnings, which is hard to
Mhm.
fathom. It was an interesting talk to listen to,
Mhm.
especially because we're building AI for investor relations, and in all of our clients are mining companies, and we're
Mhm.
building in the use case of AI for pubcos. And
Yeah.
so knowing, is this just a fad? Is this a bubble? Or is this something that's going to kind of stick around? Is something that's obviously talked about a lot in our circles.
Yeah. Obviously, we are optimistic about AI use as we're building one. But when we started working with the public companies and I was able to see what was happening in investor relations, I was shocked at if there is so much money in all of these companies and they seem to have it all figured out. It's crazy what really goes on and how much of a gap there is between having the resources, having the people in those positions, and then having no technology implemented, no systems really created, not even
Mm-hmm.
using um, just basics that is used in other industries to
Mm-hmm.
um, even just communicate
Mm-hmm.
and get
Yeah.
information out there.
Yeah, and make it easy for people to like access
Yeah,
information. Like
yeah.
one of the things that was really interesting for us was that we found that the shorter the time between when an investor or shareholder
Mhm,
asks a question to when they get a response,
mhm.
the happier they are, the higher the satisfaction score. And so it's always been a game for me when I was doing IR to get back to people as soon as
Yeah,
possible.
yeah,
You're on the toilet, someone calls you, you pick up the phone,
yeah,
and you hold it in until you finish the call. Like whatever it takes, you get
yeah,
back to people quickly.
yeah.
And then you have now all these tools and systems that are built because it's the same kind of thing that happens in consumer. Like
Mhm.
public, these massive consumer companies, they have the same issue public companies have where you need to get back to your customers quickly, except for public companies, it's investors, but you need to get back to people quickly.
I mean, even working in fashion and e-commerce, like they were using kind of AI, but they were using AI chatbots kind of like
Hmm.
way before, years ago. And
Yeah.
they were ahead of the time. I mean, I mean, right now I'm trying to reset up my phone with TELUS and it's a nightmare
Hmm.
because
Yeah.
they've been using AI chatbots forever and haven't, doesn't look like they've been updated. But
Yeah.
at least there's always at least they've implemented technology back then. They should catch up, but they have been using it. And in an industry where getting specifics and getting information is so crucial, it should not be hard to find that information. The companies should not struggle to communicate all of the important details to someone right away.
Hmm. Yeah, it's interesting because it's you have like some of the highest ROI when it
Mhm.
comes to dealing with an individual when you're talking about public markets.
Yeah,
Like the consumer thing, like you said, the TELUS example. TELUS has been trying to do it forever.
yeah,
They're I
yeah,
openly will say they suck at it, but they've been trying.
yeah.
But there's other companies like these guys, Intercom. They did a 1.3 billion dollar. They raised their last round at 1.3 billion Series D. They did it in March 2018. That's well before GPT came out, and
Mhm.
they were a customer support chatbot.
Yeah.
And they're backed by Bessemer, like all these big funds, and they generated in 2024 200 million in revenue. So it's like this is something that's not brand new to that
No,
space.
no.
But in a space where the ROI is so
Yeah,
high, it was some I
they're
was always curious why was it not
yeah, they're
here?
not buying a sweater. They're
Yeah.
investing in your company.
Yeah, and they're putting in a substantial amount of money. So like that quick response time has a big ROI. And
Yeah.
I have a lot of theories on why that is. Um, but like one of the major ones I think is when you look at the way the public markets are structured, public markets were up until Robinhood, which when was Robinhood founded? Robinhood was founded in 2013. You know, they probably didn't take on like here, let me see. When did Robinhood get big? Okay, so COVID. So there you go. COVID-19 2020. That's when you really saw this like rise of retail investors and young retail investors. And so before that, everything was revolved around institutions. Still,
Mhm,
institutions make up a massive portion, but the
mhm.
growth of retail has been phenomenal. Like
Yeah.
we've seen it go to 14 trillion
Mhm.
in AUM that's managed by self-managed retail investors. So people who click the buy button by themselves. No broker, no advisor.
Yeah.
And that's the total amount of money that's managed by retail investors in North America is 34 trillion. 17 trillion of that is managed by brokers, fund managers,
Mhm.
institutions. So there's a large portion that's just people doing research and buying.
Yeah.
But all that growth has
Mhm.
come from like mainly post COVID. Like
Yeah.
up
It's been
until it's been really fast. It's
yeah.
been really fast. Like retail used to account before 2015 or 2018, retail accounted for about 5 to 10% of
Mhm,
daily volume. Now
mhm.
it's well over 23, getting close to like
Yeah.
30% of daily volume, which is
Yeah.
hundreds of billions.
Investing used to be something you'd ask your smart dad or
Hmm.
your finance advisor, or I don't know, you'd go to someone for advice. Whereas nowadays, or at least the circles of people I'm in, it's weird if you're not investing personally.
Yeah. Yeah, no, it's really true. That's really true. That's a really good observation. Like it used to not be something you would talk about with your
No.
buddies
No.
unless you were like deep finance bro.
Yeah.
But now it comes up like I've had times like my friends who are servers or my friends who
Yeah.
are I don't know, graphic designers. Like you'll go grab a coffee with them, you go out to dinner, you go grab drinks, and like I have a friend who's a teacher now, and that's still something that we talk about a lot of times when we
Yeah.
run. Is she's like, what things are you looking at? Here's what I'm thinking of doing with my investments, and
Yeah.
it's cool. Like for me, I love it because now
Yeah.
I'm no longer the weird guy who talks about
Yeah.
stocks. Like now it's actually
Back
interesting.
back to the chaos part that we were talking about before. I do think that the chaos part and even crypto blowing up,
Mm,
like those kinds of things do make people want to just take things into their own control. I mean,
mm,
shutting down, everyone is just forced to stay home. No one
yeah.
has any idea what the government is doing
Hmm.
or what
We never do.
anyone like it's just chaos, and I think people are waking up to wanting to have their more freedom and control in their lives, and I think that's a very easy way to do it.
That's true, and like folks are becoming more self-sufficient in a lot of ways, and I think also is like we've never had so much access to information. Like if I wanted to find out about investments before, I
Yeah,
would have to talk to a broker, otherwise
yeah,
I would have to read pages and pages of a newspaper,
yeah, yeah.
which is not fun.
Yeah. But now we have all of the information that we would need. I mean, hopefully, if the
Hmm.
companies can provide that information, but we can learn. We have the information at our fingertips. There's
Hmm.
trust broken between like institutions in general, government,
Mm.
ability, and then there's this everyone no one wants to work their 9 to 5 anymore, and everyone wants to
Yeah.
have some financial freedom and their own control, even if it's less maybe stable than what people were doing investing before. um, I think it's just way more desirable now, and also just way more accessible.
Well, also like the 9 to 5 doesn't give you what it used to give you. You used to be
No,
able to do a 9 to 5
well,
and then
exactly,
you'd
and
buy a
live
house.
a good life. Yeah,
Yeah.
you yeah,
You
but
can't. So you got to
there's
find
that
new
there's
ways.
that broken trust between just the everyday person and the government and just society as a whole. there is like no way to um, just live your regular job and then succeed and buy property, buy home. You
Hmm.
have to be constantly thinking about how to make money outside of just your regular job.
Yeah, and then at the same time, like during this same time frame, the stock market's been ripping. Like it's given the
Yeah,
best returns ever, and it's doing better than any asset class, even real estate. And so you look at that and you're like, well, I want to get in on this. Like it's stupid
yeah,
not to. It's right there. And so it's just made this additional growth. And so now I think we're at like an inflection point where there actually is a market for
yeah,
now people who are technically advanced, who like trying new things to go in, because before there just wasn't even a market. Like the market
yeah,
opportunity wasn't that big. And
yeah.
so it wouldn't attract these big investors and funds and institutions. Nobody put capital into it. And
Mhm.
so because nobody was investing in it, it just kind of continued petering on. And
Yeah,
you typically find people go into IR, not like right out of school, like I want to do investor relations. Usually they do banking for a few
yeah,
decades, they're like a fund manager,
yeah.
they do investment banking, and then they say, okay, now I want to go on to the sell side. I've been on the buy side.
Mhm.
I want to learn about companies, how they operate, and then you go into the investor relations role. That's like the typical pipeline, and so you don't get a lot of people who are, excited about it and like
Yeah.
younger and want to and know coding. Like that's another big thing is it's not very common, which
Mhm.
is maybe one of the last spaces that hasn't really had a lot of penetration from programmers.
Yeah, there definitely needs to be a catch up in investor relations. Not that the people themselves are replaceable easily, but just the addition of technology and the addition of, I mean, the world is moving.
Hmm.
We need to catch up.
And
There,
IR has expanded, like kind of like you said, like now they have to do social media posts, they have to manage
well, yeah,
institutions, they have to do.
so much. Yeah,
Yeah.
yeah. And for them to be expected to stay just in this like dormant state of, well, this is how we do things.
Yeah, it just doesn't work anymore. It really doesn't work. Like,
Yeah.
I there's a fella I really like, and he just became the CEO of ES Gold,
Mhm.
and his name's Gordon, smart guy, and I met him when he was doing investor relations um, for Scotty Resources,
Okay.
and he this summer he went on and became the CEO of ES Gold.
Hmm.
And so I was talking to him about like AI and all the tools that we are building when he was at Scotty. And one of the first things he did after they did the financing for ES Gold was he rolled out Orbiton on their website. And so
Hmm.
now we sit right there on their website, and you can ask like about latest news releases and stuff like that, and it'll
Yeah.
pull up the documentation. We actually had a cool story from one of the corporates, not for ES Gold, but for Dolly Varden. One of the corporates was looking through Dolly Varden, and we called them, gave them a demo to show them Orbiton, and he
Hmm.
said, "Oh, I actually know you guys. I was using Orbiton on Dolly Varden's website,
Oh, okay.
and I was using it for due diligence, and I
Mhm.
found that." I was using it like on other companies, and it took me four. I was doing due diligence on other companies. It took me 4 hours per company. On Dolly Varden, it took me 30 minutes. And so we're seeing these use cases go beyond just retail, but it's still very new, and there's still a lot more to figure out.
Yeah.
But it's been cool to see folks roll it out.
Yeah. It's new, but I mean, it's a no-brainer. You need technology to you need to be able to keep up. But it is a
Hmm.
struggle with maybe older generations of um, liking things to stay the way that they are. So there is that jump between not trusting a new technology. Like
Yeah, yeah,
when
for
like
sure.
smartphones came out and your parents or grandparents are like, I would never touch those things. And then
Yeah.
now they all do because they're like, obviously. Now they're
Like
saying, yeah.
there's this chart that I really like that talks about what you're saying, where
Hmm.
you have like the innovators, so like 2.5% of the population, where like AI came out and they immediately started like coding and building tools with
Yeah.
it and doing all this stuff. And then you have the early adopters, so the first people who like signed up for and started paying for ChatGPT. Those were like the early adopters. And
Hmm.
then you have the early majority, and so that's like maybe after GPT-4 came out, and
Hmm.
everybody was like, "Oh my God, I can use this to do my homework. Like I can use this to pass my classes, like whatever it was." And so
Yeah.
then those people started subscribing, and then you have the late majority, and then you have the laggards. And
Yeah.
I think what's also very interesting is, and Mark Andreessen was talking about this too, is when it comes to the adoption of technology, just as a general whole, companies adopting technology are usually on the back end. So
Hmm.
usually you have the general population, and that's the biggest market, but that also is the lowest friction because people
Hmm.
can just make their own decision, take
Yeah.
out their card, pay.
Yeah.
But companies have all these rules, they have the systems in place that makes them run. And
Yeah.
so when you bring in a new technology, they're always the latest to actually adopt it. And then that also has like an attitude of being conservative and conservatism. And
Hmm.
especially as a public company where you're dealing with regulators and legal and lawyers, like I totally understand. I've been on that side and I totally get why they are conservative
Hmm.
because it is a pain if anything goes wrong.
Yeah.
You'll wait. Like that's what you tend to do, but it inevitably does catch up.
Hmm.
But
Yeah.
you're usually behind the curve.
Yeah. Don't be behind the curve.
Don't be behind the curve. But it's interesting to see how it's evolving. I'm really optimistic. I think that we're at a fun time
Hmm.
because right now gold's at all-time high, silver's at all-time high. So mining, an industry that, to me, growing up in Vancouver is very close to home,
Hmm.
is finally starting to get like the last bull run they really had was like, you know, '09 to 2013, like roughly, and that wasn't even the big one. The big one was like back in '04. And
Hmm.
so you're finally starting to see capital pour back into the space.
Hmm.
And so you're starting to see people innovate, but then you're also seeing younger CEOs like Sean Kun Kun for Dolly Varden's a good example. Like he's across the board when you look at CEOs, he's on the younger side
Yeah.
and he's innovative. And you see these groups coming out doing cool things and wanting to test out cool things. So I'm optimistic
Yeah.
that this
It's
time around it's going to be different.
yeah, it's a good time. There's more cash and there's more opportunity to implement these new technologies.
Yeah, and I feel like a lot of people have learned from the mistakes of the past. Like
Yeah.
I think a lot of people have seen, you know, they were like, "Oh, this internet thing is not going to stick around,"
Yeah.
and now, or they were like, "Ah, we don't need to post on social media. What
Hmm.
investor is on X? What investor is
Yeah.
on Instagram?" Like that was a very common thing,
Yeah.
not even like
I
six
mean,
years ago.
it's even I feel like some people are still catching up to that.
Oh,
There are
100%.
still
Yeah.
like working in marketing. There are still companies that are like, I don't know, I don't think we need a social media. You do.
Yeah.
Hate to break it to you, you do.
Yeah. Yeah, no, it
Whether
is
you hate it or
necessary.
love it, there are parts of business that you have to keep up with. You can't, yeah, you'll fall behind.
And I think people have learned that because they've seen their
Yeah,
peers who've taken the risk, and then now
yeah,
it's paying off for them.
yeah.
And so I think you have overall, like I'm a believer that the world is continually moving to a more open-minded mindset when it comes to a lot of things. And so there's never been a better time to invent stuff. There's never been a better time to be an innovator. There's never been a better time to create new things. And I think we're lucky, in my opinion, to be at this inflection point where capital's high in the markets and also there's this massive new technological
Yeah,
shift. And these happen very, very, very infrequently.
yeah,
And I'm just excited that I'm in a place where I can try to learn from it this time around.
yeah. I think more young people need to hear these kinds of things because there is so much like doom
Pessimism?
and like,
Yeah.
oh no, we're all screwed, kind of mindset. And I do not, that makes sense. The world's
Mhm.
scary, the news is scary, everything you see online is scary. But um, there are good parts and there is optimism to be had there. Um, and yeah, I think that it could be a really big opportunity time for people our age.
Yeah, for sure. I mean the whole like start a company and grow and retire at the same company that might not exist, but you also
Yeah,
like have never it's never been easier for you to make money with no education background. Like
yeah,
everything's there,
yeah.
which is fantastic. So I'm optimistic. I think it's gonna be cool, and we'll keep building Orbiton. And next week we'll chat again and See what else is new. What else? What big world event has happened? Maybe who knows? Maybe the government's actually
Yeah,
back in the
maybe
U.S.
everyone gets along in world peace. Maybe.
Maybe we'll see. We'll
Yeah, maybe
see.
we
I
have
wouldn't bet on it though.
yeah.
But
Maybe we
cool.
have awesome updates next week on the
We
world.
uh I don't know about the
Yeah,
world.
we'll have awesome updates for us about the world. I'm not sure.
We'll see.
Yeah.
But we're optimistic. So
Yeah.
it's a little bit of paradox there.
Okay.
But cool. We'll see you next week.
All right, see ya.